They put the pause button or the mute button where they shouldn't. Because you grab it right here, you hit the mute button. Sorry, guys. Thank you. Let's say hello to people. Thank God I looked at the comments. Hey, Pete. Uh, no, son. I was always there, by the way, Bob. See you soon in a one-on-one. Sounds good, Cat. Oh, Casper. How you doing, man? Long time. I remember. I remember. Congratulations on your new bull market over there. Sean, hello. Hey, Bob. How you been? Doing okay, Eric. Thank you very much. I stepped away from the markets for a few months. It is time to shorten NVIDIA. No, not yet. Um, now, I haven't shorted NVIDIA per se. I've shorted SMCI, won some, lost some. Um, we also sold puts on MSCI using iron condors. You got to be hedged with these names. So I would not be, and when I say iron condors, we sold premium, very, very wide, very, very deep out of the money puts and calls, because I worry that we can get a blow off top. I worry that when this market goes, it's going to go hot and heavy, and we're going to go to a chart of SMCI in a moment, because it is extremely overbought, but it could stay that way for a while. So I'm not ready yet. And we can go over a chart in NVIDIA as well to go short in these names. I mean, NVIDIA is clearly in a parabolic blow off top. I don't know how else you put it. And once NVIDIA goes, everything goes in the Q names anyway, not necessarily the overall market, because what we could have is a sector rotation in a very, very big way. And you've already seen it. We've spoken about this for the past few weeks. Biotechs, banks, small caps, mid caps. Mid caps have been doing really good. I spoke about that about 3 weeks ago. Symbol MDY. So not ready to go shorting outright NVIDIA yet, but I will sell premium against it. But I want to be hedged. No doubt about it. I want to be hedged. So, Wendy, hello. Hey, Bob, I'll watch later. Can you do FCX chart? FCX. Is that Freeport McMoran? What's FCX? FCX. Yep. Oh, I still got it. FCX for Wendy. Of course I shall. I hope you're not watching that State of the Union address in lieu of me. Don't hurt my feelings. Lie to me, Wendy. Lie to me, please. Oh, I see. Oh, yeah. Oh, she's on mom chauffeur duties. Now I understand. You have my special dispensation. You do what you need to do. I understand. Okay. So in the video, we're going to go over. And we're going to go over the weekly charts as well, because I want to get a vibe for how we appear ready to close out the new trading week. And then we plan for next week. So that's Marvell. The anticipated market maker move on Marvell was about $10. Now, this chart is actually uglier than the net results at current. Now, we closed at 85.99. Excuse me, 85.09. High in the after hours session was 85.99. Low of the session was 70.55. So intra-period, way outside the anticipated market maker move. But as we talk right now, we're well within the anticipated market maker move. This is going to allow for these AI stocks to continue up higher. Because why isn't Marvell getting whacked over the head right now? Simple. It's all about AI. Their AI business apparently did pretty good. Let's check out their numbers. Their forward-looking guidance is bad. Sees Q1 adjusted EPS, 18 cents adjusted. I'm not sure what I'm reading here, to be honest with you. Is this the anticipated? You know, scratch what I just said. I don't understand how they have this written. Sees Q1 law. Oh, they're going to take a loss. They do a repurchase to offset the. They don't need to purchase these shares. They don't have to. They're not obligated. Q25. Not good on EPS forward guidance. Not good on their revenues either. They're guided down. All right, so here's the consensus expectation. They were expecting 40 cents per share forward looking, and they came in with a huge guide down. Huge. Okay, so it doesn't really matter what they did this past quarter. What matters is what they expect moving forward. Business is under pressure. I'm not exactly sure why, but Marvell is in a bit of trouble. Now, DocuSign came out after hours as well, and their shares surged. The anticipated market maker move was $6.23, and they're within that range. So looks like the option premium sellers are doing good tonight. I did not trade these names, so I have no dog in this fight. I may trade them tomorrow. But I would not be a buyer of Marvell for at least until next week to see how the markets absorb this. So let's get to economic data. So this week we had factory orders come in weaker than expected. ISM services index weaker than expected. ADP employment report weaker than expected. Jay Powell had nothing to say in front of Congress, and I listened to it on the radio a little bit, and hearing these congressmen and senators speak, I think my IQ was lowered a couple of points. So a lot of Fed heads came out this week, said much of nothing. And tomorrow we're going to get the pimp Mac Daddy of them all. That is non-farm payrolls coming out. So buckle up. If it comes out weak, equities can rally. If if hourly wages comes out hotter than expected, look out below, equities can correct. So the worst thing you want to see here from the perspective of an investor is a weak jobs number with inflation on the wage front, with wages outpacing the non-farm payrolls, because that means that they're having to pay out more, productivity is lower, and that's just not good. That's stagflation, and that is great for gold. And I think that's what the gold markets are anticipating right now. Okay, so moving forward, I'm out of sequence here. At current, we have, this is a trailing PE multiple. We are about 34.5 on the Schiller PE ratio. And that's on the S&P 500 relative to the mean at 17. So we're very expensive, very expensive. And what is driving up this market are, let me see if I can grab this quickly. I went over this last night with members, and I want to share this out with everyone. If someone could travel in time and tell a random trader on January 1st that Apple would be down 11.7%, this is as of yesterday, by March 6th, Google will be down 6%, and Tesla will be down 28.5%, said trader would have been tempted to short the NDX, that's the NASDAQ composite, with this information and gotten absolutely creamed. Why is that so? It's so because NVIDIA, Google, AMD, those names are propping up the entire stock market. Microsoft, Steady Eddie, Amazon, Meta. These are the names that are keeping the triple Qs afloat. Now we're seeing some sector rotation, as I mentioned earlier, into the banks, financials, into healthcare. They're doing well. Energy is now beginning to show signs of life. We're going to go over a weekly chart of energy in a moment. But the triple Qs are propped up by a two-legged stool. You take out one of those legs and it's going down hard. So it may take until after next earnings season for this to happen. But we are coming into two seasonally weak weeks before we go into April, which is a very strong month. Hey, Jody, welcome. So here is, without the Mag 7, the 2024 earnings estimates would be significantly lower. This is forward looking. Here's Mag 7. Here is S&P 500 in light blue and S&P 500 backing out the Mag 7 in darker blue. So forget about this line here in light blue. That includes the Mag 7. Look at the earnings growth or earnings per share of the S&P 500 x the Magnificent 7. They're declining. They're declining. Here, revenue growth for technology companies has been decelerating while valuations have surged. This is a wild, wild chart. So here is revenue growth. It's in a bear market, yet the NASDAQ total return is off the charts. Why? It's because you have too few stocks making money and they're propping up this market. Add to it that people don't think that the Federal Reserve is being very accommodative. They are. If you have a 3.2% economy, supposedly you have a 3.2% economy, why would you need to cut rates? Why is that even a topic of conversation? You should be thinking about jacking up rates with the stock market moving up at these levels. That's inflationary. What happens when you get the wealth effect? Everything else becomes more expensive because people are doing well in the stock market. They go on credit, they max out their credit. All of a sudden, the stock market begins to buckle and profits get lost and they're left with all the debt. It's the same thing over and over again. So we're skating on very, very thin ice in this market. But that being said, I've been repeating this for, I don't know, since October. I said I think stocks are going up. They're going up. And sure enough, they have. So I'm not saying go dumping shares by any stretch of the imagination. I'm just saying get ready for a pullback. We haven't had a 2% pullback, I don't know, a couple of months. I mean, it rarely happens, but it hasn't happened in quite some time. We're due. And by the way, yes, we're adding to shorts now. Okay, so the past couple of days have been really wild. And this is Michael Kramer. He's kind of a perpetual bear at times. Still trying to understand, but that doesn't mean he's right every once in a while. Still trying to understand how the futures surged more than 1% starting at 3 a.m. after falling the entire Asian session, while the NASDAQ futures rose 1.7%. The NASDAQ, for the past 2 days, has risen on no news. Think about it. Here's the NASDAQ composite. On the week, we'll just go with the week. We're down on the week? Oh, that was because of early on in the week. The past 2 days. Look at this. We had the sell-off here Monday, Tuesday. Then we gapped up on the 6th. Then follow through today. There's only one problem. There's no volume. There's no volume today. We're up a 1.5% on the triple Qs, excuse me, on the NASDAQ composite on very thin volume. So it's a recipe for a nasty sell-off here very, very soon. I thought we were going to break early on, but I've been saying don't get overweight to the short side. Not too long ago, if we would have broken down as we have in the past, like back here, we broke down again, recaptured support, broke down again, rallied through to new higher highs. We're running on vapors right now. That doesn't mean it can't move up higher. So I don't want to know what else to say, with the exception of beware, folks. Beware. This is very, very reminiscent of 2000. And it was March of 2000 that the top was put in. And at that time, Cisco Systems was the NVIDIA of its day. Until it all came to an end. Can we get an intraday chart here? I want to see how they opened up the futures action this evening. Futures are down 0.25 percentage point. What's SMCI doing? Before I went live, that was up around $30 in the after hours session. Let's see where it is now. It's pulled back a little bit, but it's still up measurably versus the close. Now, I have a whole bunch of options expiring tomorrow on SMCI, so I want them to expire worthless. I sold them, so fingers crossed there. Such a strong stock, but there's only 55 million shares. Okay, moving on. Fed's balance sheet. They continue to roll off debt, but a slower pace than what they were doing. And just to put things into perspective, we're still measurably above where we were back before COVID hit. And here was a year ago now when the regional bank crisis hit. It's been exactly 1 year. I was down in West Palm Beach when this happened. This is where I got my saying from. Well, I've seen it all. This is from Sven Henrik off of X. We have weekly RSI of 94 on SMCI. So here it is, SMCI. This is probably going up higher, folks, if you can believe it. Now, my strategy here is to sell iron condors, deep out of the money iron condors. They have very, very rich premiums here. 85. This is down from earlier today. These premiums for you options traders, you know what I'm talking about. The IV rank was at 100%. Very, very expensive options. They're still very expensive, and they're like a cash cow. Let's go to the daily chart here. This is still a bullish chart. But man, when this goes, it's going to be brutal. Brutal. Here's the daily chart, SMCI. This is going up. Bullish key reversal bar on the day. Yeah, this could easily move 50 points tomorrow. Where do we close? About 1,160. Boy, oh boy, oh boy, oh boy. What an overbought stock. Let's go to the intraday price action. Wrong chart. Yeah, this is going up tomorrow. Unless the equity markets sell off, this is going up. Okay. So wish me luck tomorrow. I don't have much else to go over here. Let's go over the weekly charts. Hey, that's me. Weekly charts. Did I miss anything here? Oh, gold. Yeah, I did. So this is pretty interesting. Ratio of gold stocks, your gold mining stocks, just fell to 0.1 for only the third time in 50 years. So what this is telling you is that the ratio between the value of gold relative to the gold stocks is at historic levels, meaning gold stocks are cheap relative to the price of gold. Because remember, they have the gold mines. That gold is in the ground. Therefore, they become more valuable when gold goes up. It's not really, well, this week it's being reflected in the share price. We have a really good week this week in gold and the gold stocks that we own. So let's take a look quickly at gold and talk about where we stand from a very, very macro view. And the way I want to kick it off is I want to take a look at a ratio chart of gold versus the S&P 500. And gold on the month is vastly outperforming by 4% the S&P 500. We're only 7 days into the month. So gold looking the bomb here as we proceed into the new trading week, looking really, really good. Let's drill down. Let's take this gold. As a matter of fact, let's see how it's doing on a weekly basis as well. Outperforming on the week by 3%. Relative on a daily time frame, it actually pulled back on a relative basis today. Let's check out gold relative to NVIDIA. I'm sure NVIDIA is still outperforming by a mile. Yeah. Let's go to the weekly chart. NVIDIA's been up like 6% this week. Oh my God. Relative to gold, relative to NVIDIA, gold is still in a very brutal bear market. So let's check out the standalone view. Gold quarterly chart. Remember, this is the end. This is the final month of the quarter, and we are breaking out new all-time record highs for gold. Clear blue skies. The path of least resistance is where? Up. Beautiful chart. And with the dollar breaking down now, this chart is only going to get more exciting. Weekly view. Beautiful price action on the week. Gorgeous. Gorgeous price action. On the day, up about 1/3%. We're going to pull back here. Now, this is ridiculously overbought. We're going to pull back, but I'll be buying more on the pullback. I'll tell you that right now. Look at the volume. Incredible. So gold looking awesome. Let's check out the weekly charts. Fed watch tool expectations for a rate cut in May has risen. Wow. It's now 34%. This was in the low 20s yesterday. Not much of a change in June. July is back up into the 90s. So this market can continue up higher, folks. Doesn't mean we can't get a 2% pullback, but it's going up higher until such time as those rate cuts hit, and then it's probably going to be all over. Yields are breaking down. One trading day left to go. Down on the week about 2%. Daily view. They formed a spinning top formation today. Maybe we'll get a counter trend move here, but clearly the path of least resistance remains to the downside on yields. The question clearly is this. As we're going to hear tonight on the State of the Union address, this is the best economy ever. Ever. We have 3.2% GDP growth. Then why are yields dropping? Why? Why are we not talking about a rate hike to slow things down? Because inflation hasn't gone away. The only reason why they're not is because the only reason why the economy is growing is because of government spending. End of statement. Bitcoin in fuego, almost new all-time highs. Bond prices, higher lows here, TLT, they want to move up higher. You should have a position in bonds if and when this market goes in the wrong direction. Meaning you see the yield curve, which I did not go over tonight. It did steepen today. I think it's still down on the week. This is a monthly view. We're doing a retest of the breakout point from back in January. This is the second consecutive retest. Talon. Hey, brother. Interesting, gold and Bitcoin moving together. Yeah, but it won't stay that way. Bitcoin is a risk-on asset. Gold is not. Gold is more of a safe haven play. So I think it's just coincidence right now. Which gold stock is the best to buy? I prefer buying ETFs. I like GDXJ and NUGT. If you want best of breed players, I would look at Barrick. I would look at Newmont. Those names. I bought up SoFi, which should have bounced. Blah, 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 blah. Yeah, good little company, SoFi. They kind of screwed me on Bitcoin, though. I'll tell you that. Pete's staying on the sideline, keeping gunpowder dry. Nothing wrong with that, pal. All right, so yield curve down on the month so far, weekly view. On the week, we remain down. And on the day, I think we were up today. No, we were down today. Oh, that's the month. Let's go to the daily chart, Bob. Daily chart. There you go. Yeah, we were up today. So a threat to the market could be a spike in the yield curve. If we see that begin to break out, especially if it puts in new all-time highs, the steepening of the yield curve, meaning going back to the monthly chart, if we take out the highs of January, we're probably going to uninvert. And when we uninvert, that probably means that equities are in free fall. So keep an eye on this chart. I always do. If you don't want to keep an eye on it, subscribe to the channel and join us on our live streams. And if you want me every day, 14-day free trial offer. That was smooth. The dollar. It has begun to fall apart. This is the grease that's going to allow gold and the gold stocks to go like this. A break in the US dollar. The problem is that it's going to stoke inflation as well. Remember, it's still the international currency. Unfortunately, it is the currency that commodities are usually priced in. So if the dollar goes down, oil goes up. If the dollar goes down, gold goes up, etc. Now the euro, big breakout this week. Big breakout this week. And a shocker was that the yen, of all currencies, ripped up higher. This is mostly today. On the week, we're up 1.41%. So you take the dollar and the yen moving up higher, dollar goes like this. Or excuse me, euro yen goes up higher, dollar goes like this. I think I said that, just in case I didn't. VIX, a big rally on the week. We're up 10%. No breakout, though. One trading day left to go. Higher lows on momentum. Daily chart. It's like a coiled spring. Moving on. Dow transports. They break out, they break down, break out, break down. I can't ignore this consolidation. I have to give the odds to bulls here. I have to. I mean, this consolidation began going back here, May of 2021. So to think that the transports are just going to break the support level, I don't know. I don't think so. I think that's going to be hard as granite to try to break through this. So the path of least resistance remains up. Let's take a look at the daily chart. Then I want to come back to the weekly chart. I want to check out a couple of transport names. Daily chart, we closed back above 15,800. How is volume? Light, as expected. Let's go back to the weekly charts. CNX, these are railroads. Not much happening there. FedEx, I think FedEx has to report soon. I think this is their last earnings season. Consolidating, moving up higher. UPS, not much going on here. So watch the transports. Eventually, they're going to break out. Dow Jones weekly chart, a down week so far. Stochastics are rolling over. We're losing a bit of momentum. Daily chart. So note how we broke support on the 5th. Now we're limping back up. I think that this fails. I think that we roll over here, which is one of the reasons why I've been adding to short positions. Not aggressively, but now it has. I added more today. It's got a little bit more teeth to the short positions. We've been very patient with adding to them. S&P 500 weekly chart looks like it wants to go up. I mean, my God, look at this rally here. Let's take our crayon out. Let's clean this up, clean that up. We're right at the upper band of the rising up trend channel. Let's go to a daily chart, see how volume was today. Look Look at how extended we are here. We haven't been down below 20 on the stochastics since October. Look at this extended rally here. And look at what happened this week. This week was a very technically significant week in that we broke support. We broke the rising ascending wedge formation. And this is what I told members was going to happen. Don't short this break. Wait for the retest. Wait for them to rally it back. Now, we've seen this before. We saw it back here, ripped through. Saw it back here, ripped through. So just because I'm making this observation doesn't make it a definite fact that this is going to break support. It's just a good setup. Now, if we break out, well, then we stop out of our short position, take a licking, and get further along in the market, enjoy the next leg up higher. But this is not going to end well. How's volume? Very, very light volume. Let's take a look at the closing price action, see what they may do tomorrow. Not a great close. You saw selling in the back half of the day. Let's check out the futures again. I want to get a vibe for ES and NQ. What the heck? ES is down fractionally at current. NQ is down over a half percentage point. But they've been doing that. Then as soon as 4 a.m. opens, they goose the futures up higher. Past 2 days. Moving on. Trip Qs. Weekly chart. We're down on the week. They just may need a parabolic blow off top. Let's see if I can bring up NASDAQ comp from 2000. NASDAQ comp 2000 bubble. Here we go. It began in October in earnest, ended in March. Excuse me. What a move. On the year, NASDAQ comp up 8%. So does this look anything like 2000? I would say that 2000 was far more ruthless than what we're seeing right now. So this could still have legs. The one big difference back in 2000 is that you had tremendous volume. Whereas at current, volume's good. It's not great like you saw in 2000. This was stellar volume. All right, let's move on. Semis. Weekly chart up 6% on the week. RSI on the semis 83.76. I wouldn't short this. NVIDIA. RSI now nearly 91. And no signs of stopping. So somebody asked about shorting NVIDIA earlier. Where are you going to short it? You know, where are you going to short it from? You can go to a weekly chart and war game it out. This is kind of what we did with SMCI a couple of weeks ago. You know, we've blown through the extrapolated upper band of resistance. We did that a while ago, weeks ago. So now let's go to a monthly chart and see if we can extrapolate out from there. Nope. This thing is in. There's no way to tell. There's no way to identify. Let's bring up TrendSpider. Maybe their algorithm picks up something here. Maybe on a quarterly chart. Quarterly chart, yet again, closing above the, or appear poised to close above the 2 standard deviation Bollinger Band. Let's overlay on, let's just go to the quarterly chart. Forget about the overlay. Look at this. This is insanity. My God. There was your upper band of resistance at around 524. We've doubled it, nearly doubled it. Where do you short it? It's going parabolic. It's probably got another 10% in it easily. If it crashes tomorrow, I wouldn't be shocked. If it goes up another 10% tomorrow, I wouldn't be shocked. What's it doing in the after hours session with NQ down? SMCI, what are you doing? Got to keep an eye on you. That went over 1200 after hours. What's the volume here? Volume, that's died down. NVIDIA, up 4.5% on the day. It closed at 926. It's up at 939. It was up as high as 941.44. This one here, you gotta wait for the top. And what happens if you're looking for what does the top look like? A top should look like this right here, where you open up very, very strong and then you reverse hard. But you're not going to do that on a daily chart. You could, that'll begin it. But really what you need is this to happen, a bearish reversal bar on a weekly view. Let's do a hypothetical. As a technician, would I short this stock right now? No, I would not. I would not go out. I would not buy puts. I would not short the common stock. No way. Would I short it selling deep out of the money call spreads? Yes, I've been doing that. It works. Would I simultaneously sell a put spread, creating an iron condor? Yes. Why? It works. But you cannot get greedy. Just when you think it can't go to your strike price, guess what? It's at your strike price. So you got to stay far, far away. Beware. Respect these stocks. So what I would be looking for is a week like this where we're up on the week huge. And then by the end of business on Friday, we close down. Think about this candlestick by the end of business tomorrow having reversed all of these gains. That would absolutely destroy confidence. Destroy it. It would take a lot of selling. You could bet your bottom dollar that down volume bar on the daily chart is going to be the biggest volume bar of the year, maybe with the exception of post-NVIDIA's earnings. That was right here. And to be honest, that volume wasn't that awesome. And then we would close back down below this upper band of resistance, which we have respected, yet now it's just going parabolic. What else do we need to go over here? Discretionary names. Oh, staples. Staples are going up higher. Seeing some sector rotation into staples. How did my Philip Morris do today? That was up again. It's on the week. Philip Morris on the week. Wow, this is a great looking chart. Altria Group, for you purists out there, Altria. A lot of you young people are out there saying, what's he talking about, Philip Morris? That was the old Altria. Altria. We own this. Pays us a big fat dividend. Altria, where is it? Beautiful weekly chart here. Now this is what I'd be looking for on the video. We were down big. Now what are we doing? We're poised to close up. That's bullish. And if we close at where we closed today or better on the week, that would be a breakout. Good looking chart. Good looking, good volume too. Very, very good. All right, moving on to discretionary names. Not so good. Not so good. Avoid. Emerging markets. Folks, this is emerging markets ex-China. We do own it. With the U.S. dollar now breaking down, you got to look to emerging markets. Their stocks are cheaper than here in the United States. Now, one thing to keep in mind is, let's say we have that black swan event here, that 2020, that 2018, that financial crisis event, yield curve is steepening like a son of a gun. These will go down just as they did back here. But I'm telling you right now, the cash hoard I have on the sidelines, guess what I'm going to be buying first? Emerging markets. Hand over fist, no China. This is emerging markets, no China. So to illustrate why we like this better, because I've said since COVID came of a thing, I said that China is uninvestable. So here we are on the year. Ex-China, this is up 3.9%. with China. Up only, this is the EEM, 30% mainland China, up 1.62%. Ex-China doing double better in returns than with China. Now, FXI is beaten up. Maybe there'll be a catch-up play there. FXI, the Chinese mainland stocks, down on the year by nearly 3%. But what does that tell you? The EEM is made up 30% of Chinese stocks. China is down almost 3%. Yet, the EEM is up, what did I say, 1.62%, thereabouts? So that tells you how well the rest of the emerging markets are doing. Why? The reason is that they are commodity producers. Commodity prices are becoming more expensive again. Oil's going up. Natty gas just had a run. It was down today. You're seeing names like BHP beginning to rally. BHP Bulletin, we own this. Freeport McMoran, which we're going to go over further in a minute. That's up 5% on the week. I mean, these stocks are getting ready to rip up higher. GLD, gold, up 3.65% on the week. Silver, up over 5% on the week. So you see what's happening here. You're having these names that are getting ready to break out of massive, massive bases. So if you're going to ask me, hey, Bob, where are you going to put, if you had an extra 100,000 lying around, would you buy NVIDIA or would you buy a basket of commodity names? I'm taking the basket of commodity names any day. Look at this consolidation on silver. This is a multi-year consolidation, and this is the mother of all bull runs getting ready to happen, and it's already started. You got to love it. So I'm very excited, very, very excited. Energy. This sector's starting to come back alive again. The problem is that if energy's up or energy stocks are up, that means that in all probability, oil is up. But the interesting thing is that the correlation between XLE and oil is breaking down. Very, very strange. It's rolling over. It's at its lowest point since February of 2023. Perhaps the seasonality, I don't know. Because oil is down on the week. Gasoline is down on the week. This is broken out. This isn't a new bull run. So we got to pause this week on energy prices, but the energy stocks are going up. They're anticipating higher prices. Let's do some chart requests, and we will call it a night. We did gold already. Here are the gold mining stocks. GDXJ, we own it. That's up. You want to take a look at this on a monthly time frame, the consolidation that's gone on here. Really nice. Stair-stepping higher. Getting ready for a breakout, folks. All right. All right, so we're going to begin with FCX for Wendy. Let's go to a weekly chart first. Now I'm biased here. I think that these names are going up higher. You do have some overhead supply here. On a monthly time frame, you have resistance above in dashed line. Yes, I'm using a weekly chart, but I'm able to overlay. This is Trend Spider. There's a discount code below if you're interested in a great multi-time frame analysis. And That is at around $42 per share. Expect resistance there. You have some fractal resistance as well. But I think ultimately it's going to get resolved to the upside. Why? US dollar declining. Look at the breakout on the day today. Big move up higher on volume. So I think that this is an investment. I don't think it's a trade. I think you're going to have to go through a lot of backing and filling because we've been in this trading range for quite some time. It's not going to be easy to get out and above this resistance level at around, let's call it $44 per share. We will, and then we're going to be witness to a huge bull market. Next major resistance is up at, obviously you have resistance here at these points. But once we get through this, this stock can rally up to $70 a share. So FCX, I like quite a bit. Daily chart, expect backing and filling here. There are a lot of sellers up here that bought this stock and they just want their money back. So if you get a brutal down day, don't let it discourage you. Think about the long term. Don't look at the daily charts. Don't look at the intraday charts. Look at the long-term charts, weekly charts, monthly charts. Otherwise, you're going to drive yourself crazy. This is an investment right now. So I like it longer term. Do I like it as a swing trade? I know Wendy's a swing trader. Do I like it as a swing trade? Not really. No. I'd rather just buy it, put it in my long-term portfolio, and watch the dollar drop and commodities rise and reap the rewards. Does it pay a dividend? Probably does. FCX. Small dividend, not great. I prefer BHP because BHP pays 5.26%. So I'm holding this for the long term. Plus, I want the capital appreciation. So I want to get paid a dividend as well. Now, what else do I want to go over here? Somebody wanted one. GE. GE, last I looked, was very, very overbought. Oh, man. Wow. Yeah, they're going to do it. They're splitting up the company. I purposely avoided looking at this stock. I did not want to arbitrage this stock. Normally, I would say you got to short it at resistance. I don't know. There are just some times where I just find it best to avoid. RSI remains overbought. Volume still heavy to the upside. You do have resistance above. If anything, I would sell a call spread, generate cash flow. I would not short this. They're breaking. There's a lot happening here. A lot of whales involved in this stock, and they're going to unlock a lot of value. So the sum of the parts is greater than the whole. So I don't know if they're going to let this stock fall apart. So I don't know when the breakup is. I know nothing about that. I would not short it. I would not buy it. If anything, I would sell a call spread against it deep out of the money. Look at a 10 delta short, 5 delta long, and generate some cash flow. Simple as that. Corn. Now, corn last week on Sunday Night Futures Live when we went live, that had flashed a bullish reversal week the prior week. Let's see what it looks like this week. And we had a continuation move up higher. Would I buy here as an investment? Probably. I don't know how much more blood is going to be in the streets here. So I kind of like it as an investment. Let's take a look at a monthly chart. That's a quarterly chart, monthly chart, Bob. Yeah, you got to like this. You got to like this. This is I think that we're rallying here. Do we break out? You can never guarantee that, but it looks like it wants to. And given that commodity prices are moving up higher, I think it's only a matter of time before corn agriculture bounces back. Wheat was weak last week. Let's see what it did this week. Still weak. Yeah, this I would not buy. Very, very weak on wheat. And that's it, folks. Thank you, Jeff. Start a trend line in the video from April of 2020. What time frame? Weekly? To use that, it would be off the charts. This you could use. It was resistance here. And that would bring us okay, thanks, Jeff. That would bring the, where do we close? 926. It's saying it coincides with about 9. Let's go to 1,000. I wouldn't short this stock below $1,000. Hey, Disaffected Canadian. Thank you. Doesn't Biden speak tonight? Yeah, he speaks tonight. All right, all. Everybody have TZ Burton, you're welcome. Everybody have an awesome night. Thanks for being here, and I will talk to you tomorrow. Be well.